Let's welcome in Shreyas Devalkar, Head of Equity at Axis Mutual Fund. Is with us. Shreyas, good morning. Good to have you with us here. Thanks for your time. So what is the saransh, if I can ask you that, in terms of how's the view developing between you, your team, fund managers, analysts, in terms of stocks you own? What kind of impact do you see because of these tariffs, etc., which have been announced? And it's not just day one, right? I mean, you'll have to sort of track this as you go along. But headline view first, Shreyas.
Well, thanks for inviting. If you look at actually, as it is always said, that uncertainty is always the certainty, and more so in this market nowadays. In this tariff and associated impact on the companies, generally exports-oriented sector, one need to be really careful. That's what we are also looking at, because there may be some retaliation from multiple countries, there will be legal challenges, and there will be even this tariff may get reduced. Probabilities there, obviously, in this. So any action which we take now based on what is the outlook, and forget about us taking any actions based on the stock's price movement, etc. The companies as such themselves won't take actions, right? Whether it is any decision to try to shift plants or set up a plant, and this indecision, which is probably will hurt in near term. It can be indecision simply from a US company not to import today because today tariff is higher, while you don't know 15 days down the line the tariff will be lower, and those chances are there. So there's a lot of uncertainty which will have impact in numbers for company as such. That's where the bigger discussion is on where the uncertainty is low and where one can invest in from a longer term point of view. In that context, generally in over last 5 to 6 months, actually, we have increased our exposure to financial services sector, and that primarily because of the reason that it would be immune to such volatility. At the same time, we would have reduced to any export-oriented companies, may it be auto ancillary or IT sector. Today, and one more angle in this market today is about valuation, and that is very interesting. Generally, market is anchored today still, I don't know, but still I believe that market is anchored to the valuations in last 3 to 4 years. While one need to really check and recheck why and wherever the valuations are higher than pre-COVID level, one need to really justify why they are higher and whether they should be there or not. I'm not saying they should not be. Point is, one need to really think about it and check what it is and where it is, considering again the uncertainty overall in the economy and global economy as such. So these are the few thoughts which we have today now.
By the way, look at the Nifty chart and the stocks. Now it's a bit of a waterfall decline. We opened okay, and then it's just... Look at the Nifty now. Look at that graph. It's a straight line down, and everything is suddenly selling off, including pharma stocks. ONGC instantly opened 3% lower, now 6% lower. Look at a Hindalco, opened about 2% lower, now 4% lower. And even pharma is not getting spared. Look at Sun Pharma, Cipla, a lot of these names under a fair amount of pressure. Reliance itself is suddenly down 2%. So it's a complete knock. 220, and it's accelerating now. It's gathering momentum on the downside. So let's watch. Difficult morning.
Just on that point, and I think Shreyas was saying maybe 15 days later tariffs could be lower.
Kind of pull back a little bit.
But I think if you hear, and we played out that soundbite, you tossed to it, the Trump soundbite, right?
Yeah.
Right. He seemed unperturbed. He actually, if you just see what he said after a 6% decline, he said, well, readjustment was needed. So
the operation had to be done.
Operation. It's a patient. Operation is now over, and now there is recovery, etc. So almost as if they're prepared for it. Yeah. And if you remember in the speech to the joint session of Congress, Trump had at that point said, there was this one line. He said there'll be short-term pain. So actually, and of course, I mean, his Treasury Secretary is a 30-year market veteran. Yeah. So it's very unlikely they didn't see that markets will.
But they haven't thought this through. Yeah. Seems they have.
So, which then means that there is no quick, going back. The bar is high, negotiation, etc. can happen. Not that it can't, but the bar is high. It's going to be tough when they sort of dug their heels in.
So the only way to basically get to the other side is go through it and stick with the pain. I mean, the decline on the Nifty itself accelerated a little more as we broke yesterday's low. Yesterday's low was 23,145. The next 100 points came immediately. Now the 23,000 mark is psychologically extremely important. So we'll keep an eye out on that. We have a couple of technical levels as well. You know, the 20-day and the 50-day moving average very close.
You know why? Okay, I just looked at the Asian screens. The reason why we've got this waterfall decline on the Nifty now is suddenly Asia is completely cracking. In the last, I think, half an hour, Japan has fallen 1%. It's a large market, the Japanese market. And Nikkei was about 2.5% lower at 8 o'clock in the morning. Now it's 3.5% lower. So this is big stuff. It's painful stuff. And folks, even if one has to just walk through this is not about, immediate readjustments. You don't readjust global trade lines in a matter of 2 weeks or 1 day. You know, the supply chain realignments, it's very big stuff. And the markets, it's a new beast that the market really has to perhaps deal with post-COVID. Shreyas, hi, great to have you on the show. So in the interim, I mean, we can go to economics and we can say India doesn't get impacted that badly. But markets move on sentiment as well, right? Sentiment plays a huge part, and that's working against us right now. What should the strategy be for investors to ride this period out? Whether it lasts a week, a month, 3 months, we don't know.
True. And in that context, as I said, this uncertainty is mostly currently emanating from the global. And in this uncertainty where this tariff and the end game is not yet seen. Actually, everyone is evaluating currently the first derivative. The second and third derivative is more important, where how it affects the demand globally, and accordingly how it affects Indian companies. So as far as investors are concerned and investments are concerned, the way we are looking at it is be cautious on the exports-oriented sector. Valuations keeping aside, and as far as domestic-oriented sectors, as a long-only investor, one should look at more towards the domestic-oriented sectors, which may be in financial services, in consumption space, as well as in the investment space.
Okay.
All right. Now, just a quick word on the IT services. I mean, it's well understood, right? US is the problem. So India IT is exposed 70%, 75% of the business still comes from there. So it kind of throws everything in a flux. But how are valuations here? And any views, strong views here, Shreyas? On any names or any segment here? Go on.
Definitely, yeah. So this is a very interesting sector, and this I always use as a case study for this uncertainty. If you look at the first decade of this century, this sector used to grow at closer to 15%. The second decade, it used to grow at closer to 10%, and today it is closer to 5%. And if you see, valuations are broadly there in this period. One can argue that yes, the payout companies actually stopped acquiring the way earlier they used to be acquisitive, and that's why the free cash flow generation was poor. Today, the free cash flow generation to PAT is right from 80 to 100% in the large cap, and somewhere to 60 to 100% in mid and small cap. And then the payout ratios are also higher. So that warrants somewhat the re-rating, adjusting for the slowdown in the growth. But the fact of matter is the growth is lower than earlier with increased payout ratios. So this valuation, though, may look like that yes, they have not got derated to the extent of the slowdown in the sector, but partly it is getting supported by the higher payout in the sector. So in my judgment, whenever historically we have seen that whenever there is an uncertainty, wherever there has been any potential lack of decision making by their US-based client or Euro-based client, this sector, irrespective of its valuation, has faced challenges in terms of its valuation. And in the context of this decade, the way the growth has been, one need to look at it holistically and then tread it through it cautiously, rather than going by the headline valuations per se.
You know, everyone's talking about relative places for safety and domestic-facing names in the light of global uncertainty. Maybe banks are one of them. Then you have the consumer space, you have the cement space, you have local infra space and defense space, etc. But one is just trying to understand whether there will be any absolute gains out here or not, because Earlier, we had Digant say that, maybe because of the public sector banks outperforming, private sector banks' growth will be in check. We've seen updates coming in from the consumer space. They aren't, very satisfying. At the same time, things where there is some sort of growth, the multiples are out of whack. So what does one really do?
Yeah, that's where it is interesting point which you raised on the absolute gain, and that's where someone who is invested in the market, one should look at a relatively longer term view of 2 to 3 years at least, rather than hoping that there will be immediate gains in this, unless again all these tariff related things get changed. And as you are also highlighting, it's not likely that soon something would happen on this, and that's also opinion of multiple experts that the changes are not expected to be sooner. Even in India's case, the bilateral trade agreement is now expected over 2 to 6 months. So that is again, so whenever these countries will go through these bilateral trade agreements, you will see that more clarity will emerge in this uncertainty.
Okay, all right, Shreyas, we'll leave it on that note. Thank you very much for joining in and offering us some perspective on what's turning out to be another slightly difficult morning. The mid-cap index is also down 1.5%. It's tough to show bravado in the face of a 5-6% kind of an overnight US market decline.